So Samhi Hotels is in focus right now. Ashish Jakhanwala, CMD and CEO of Samhi Hotels, is joining us now. Ashish, afternoon. Thank you so much for your time. As I look at your, the losses are actually narrowing on a yearly basis, and that's exactly what you had kind of indicated going forward. Talk to us about operationally how things shaped up this quarter, and the main idea of your IPO that with going forward with each quarterly result, you'll be looking at reducing the debt. How is that progressing?
So thanks so much for having us on the call, on the show. Operationally, it was a pretty strong quarter. The revpar, which is an important measure for any hotel business, grew at about 20% compared to the same quarter last year. So that's a pretty good growth. Our total revenues actually grew at about 39.5%. But there was some contribution of the acquisition we had made, the ACIC acquisition, to that revenue growth. But even the same store growth has been pretty strong at about 17-18%, right? EBITDA has actually grown to about 51%, crossing the 100 crore mark for a quarter for the first time. This is pre-ESOP. So overall, I think we're very happy with the quarter three. We've crossed the what we call a strategic milestone of 100 crore EBITDA. When it comes to two other questions you asked us about, losses narrowing down and the deleveraging. So absolutely, if you see our PBT before provisional expense or before exceptional items, actually has narrowed down from a negative about 80 crores to just about 6 crores, right? So we've seen a huge transformation of our PBT before exceptional items of being negative 80 crores to just being negative 6 crores. So we almost break even when it comes to PBT. And that's largely on account of the EBITDA having grown, crossing 100 crore mark for a quarter. And two, the finance cost has come down from almost 120 odd crores to just about 65 crores for the quarter. And that's because the debt has been reduced. And also on the residual debt, the cost of debt has come down, given the fact that our leverage profile is much healthier now.
No, sure. So you've almost broken even at the PBT level, but at the bottom line, when should we expect that to happen? And yes, debt has been coming down, but let's say what's the level that we should watch out for 12 months out? What's the sustainable debt number going forward?
So I think we had obviously this exceptional item in this current quarter of about 76.8 crores, because of which you see the PAT being 74 crores negative. Otherwise, it would have been almost profits are concerned. So that's number one. Number two, in the long term, and when I say long term, towards the end of FY25, we do expect our net debt to EBITDA to go down from the current levels of about 5 times to about 3.5 times. In terms of sustainable, we think over the next 2 years, as there's a strong upcycle, some of our inventory, which is not open today, will open towards H2 of the current next fiscal year. We think by FY26, we will see that number of net debt to EBITDA being more in the zip code of 3 or just below 3 times.
Ashish, now that operations are good, you have inventory lined up to be opened up for the market, which already has tailwind, and numbers are turning around as guided. For a long-term shareholder who has got into a story, just say in the last 3-4 months up around IPO, what kind of EBITDA levels are we talking about for FY25 ending? What do you have in mind?
No, so I think first it's a simple addition of some facts we've delivered, right? So as I said, on same store, we've delivered 100 crores quarterly run rate. So that should add up to about just 400 crores, even if there is no growth from what we saw in the last quarter. And then in addition to that, we'll add about 300 more rooms to our portfolio, which is almost, I would say, about 7%, 8% inventory growth by September of 2024. So I think you are clearly looking at, we are already reaching about, let's say, 400 crores of EBITDA on a run rate basis. I am hesitant to give any numerical guidance, but we think we will maintain a high teen to an early 20 growth rates on EBITDA for the next fiscal year.
Okay, so a number closer to 500 crore maybe can be a number to work with to end the new year, which is starting now, FY25.
I think anything in the zip code of 450 to 500 is what is easily achievable, given what we've delivered in the last quarter.
Okay, just before we let you go, one quick word. Once you have such good economic heft on your books, and every industry participant we speak to is saying that various segments of hotels are doing very well. It's in a very long time that we are looking at leisure growing well, business growing well, and now spiritual tourism also adding kind of a segment to the. Do you have good visibility of a high teen kind of a overall outlook beyond 25 for next 2-3 years?
Yeah, so I think first of all, there is still some scope in occupancy levels. Across cities over the last 9 months, We've seen occupancies in the zip code of 70 to 80%. I'm talking about business hotels, key cities. We think given a very high utilization on the weekdays, there is still scope for occupancy levels to improve from the current levels, which by the way is busting the myth that business hotels can't do above 70% occupancy, right? So that myth is already busted. We think you'll see occupancies remain pretty strong. And on the backdrop of that high capacity utilization, no new supply, you would see the rate growth to remain in the high single, early teens, depending on which market, which segment you are in. So I think a double-digit revenue growth for the next, I would say 2 to 3 years is quite possible, given there is effectively no supply coming in. And all demand levers are definitely growing in that zip code of 8 to 12%. Office space, airline, leisure travel, most of the economic indicators for hotel consumption are growing in that high single double digits. And therefore, that growth rate is quite sustainable for the next 2, 3 years.
Okay, so that's the kind of visibility you have. At least the double-digit growth will continue, 450 to 500 crore kind of EBITDA, and of course break even as soon as Q4 itself at the bottom line level. On that note, we let you go. Appreciate you making time and speaking with us.